Hello, I'm Jamie Green of AdvisorOne, reporting from the floor of the Charles Schwab Impact 2011 show in San Francisco. And I'm joined here today by Brian Schmucker, CEO of Chicago-based River North. River North's, your colleague, Patrick Galley, is kind enough to supply AdvisorOne readers with insight on the closed-end fund space on a monthly basis, so thank you for that.
You're welcome.
And I'd love to catch up with you on your two funds, one of which we had written about in Investment Advisor, and another one which has attracted some buzz lately with partly because of Jeffrey Gunlock's name is attached to it. So
Patrick would like to think it's him, but yeah,
there we go. Okay, a little bit, yeah. So tell me about the fund.
Yeah, so the Core Opportunity Fund is what you wrote about the first quarter of last year, and we actually soft closed that in June because we have capacity constraints. As you know, as we talked about, closed-end funds, there are only so many of them and they're thinly traded, so flat out you just can't manage a lot of money. So that fund we closed about $500 million, still a 5-star fund, in a 3-year period, still top percentile. So it was a time to close it when the flows were picking up, but that said, you want to create alpha and you can't manage a lot of money. But it's still doing very well. The other fund, yes, with
it's still open to existing investors.
It is. So anybody that put $1 in is still eligible to continue to contribute. And we wanted to preserve that investor base. And as you know, the closed-end fund space is pretty niche-y, so you either get it or you don't. And those that get it appreciate the inefficiencies and yada, yada, yada. That's why we do what we do. In terms of the River North Double Line Strategic Income Fund, that fund's grown quite a bit this year. It's about $550 million in assets. In terms of soft closing,
that's $550 million, starting from zero. And that was
starting from zero.
February or something?
We ramped it up the end of January.
Okay.
Officially, it launched the end of December because we wanted a full year of track record.
Okay.
But we really didn't ramp it up until Jeffrey went on CNBC and he talked about, a little bit about the fund. Then we did a press release, yada yada.
Okay.
And that's about 550. It's up a little over 10%. Obviously, almost 1 year is not a long track record, but it's off to a very good start. And we're very pleased with it.
And I assume advisors are attracted to a fixed income vehicle that gives you perhaps a little bit more than what a treasury might give you.
Correct. And those that appreciate what Jeffrey's doing on his side of the business in terms of fixed income and in mortgage-backed securities in particular, there's a big following there with Jeffrey, and there's a big following with the closed-end fund folks as well that there's higher yield there because there's typically leverage used with the fixed income closed-end funds. So in a market where everybody's starving for yield, it's a good place to go in closed-end funds because they're going to have a bit of an enhanced yield feature to them. So we can get paid to wait and still get a little bit more yield and not even be actively trading. But the market is volatile. Closed-end funds are traded, are owned by retail investors, so they buy and sell for irrational reasons. And so for us, the environment is pretty ideal.
Because you know the closed-end space, so you can take advantage of those inefficiencies that.
Correct. So they're one of the few investment vehicles where you know what they're worth versus what someone will pay for them. And what people will pay for them is the share price that fluctuates throughout the day. Certainly what it's worth is the NAV, which is reported at the end of each day. So the markets are perfect for what we do, and we like volatility. Certainly if it's a complacent environment and everybody's making money, closed-end funds will probably not be the best place to be in terms of the real big alpha opportunities. There's always opportunities because they're inefficient, but when there's volatility, people are buying and selling for different reasons. It presents quite a good environment for us.
Great. Well, thank you very much, Brian Schmucker of River North, and this is Jamie Green from AdvisorOne, signing off.